If you've been following gold prices recently, you've probably noticed that something unusual is happening. As of January 21, 2026, gold is trading at record highs, with the price of 1 ounce ranging between 4,700 and 4,770 USD. This is a massive increase compared to just a few months ago, and so far there are no clear signs that this rally is slowing down. Today, we'll explain why gold is rising so sharply and answer the most important question everyone is asking. Is gold a good investment in 2026? Let's begin. Part 1. Why is gold rising so strongly? This surge is not random. It's driven by several powerful and very clear factors. Number 1. Geopolitical uncertainty. The world is facing growing instability. Ongoing crises in Venezuela, rising tensions in the Middle East, the continued war in Ukraine, unexpected political discussions in the United States, including debates around Greenland, renewed trade tensions between the US and the European Union, with new tariffs being imposed. Whenever investors feel uncertain or unsafe, they turn to gold as a safe haven, and demand rises sharply. Number 2. Inflation is not over. Although inflation has eased slightly, it remains above the Federal Reserve's 2% target. At the same time, rising government debt and fiscal deficits are increasing fears about the long-term erosion of currency value. This is where gold plays a key role as a store of value and protection of purchasing power during periods of excessive money printing. Number 3. Central banks are stockpiling gold. China, India, and several other major countries are buying hundreds of tons of gold every quarter, aiming to reduce their dependence on the US dollar. And it's not just governments. Gold ETFs are seeing massive inflows, hedge funds are increasing their positions, retail investors are buying physical gold, bars, and coins. In fact, you can even buy gold from major retail stores now. Number 4. Interest rates favor gold. Market expectations suggest that the Federal Reserve may cut interest rates multiple times during 2026. Lower interest rates reduce the opportunity cost of holding gold, an asset that doesn't generate yield, making it more attractive than bonds or cash. The result? Gold has risen more than 60% in a single year, hitting new all-time highs almost daily. Part 2. Should you invest in gold in 2026? Now comes the most important question. Is this the right time to invest, or are we near the peak? Important disclaimer. This is not financial advice. Always do your own research and consult a qualified financial advisor. What do major analysts say? JP Morgan expects gold prices to exceed $5,000 per ounce by the end of 2026. Goldman Sachs sees levels around $4,900. HSBC targets approximately $5,000 in the first half of the year. More aggressive forecasts, such as Yardeni Research, suggest prices could reach $6,000 per ounce. The World Gold Council indicates a potential 15 to 30% additional upside if economic growth slows. Bottom line, most forecasts point to potential gains of 10 to 20% from current levels. Part 3. Advantages of investing in gold now. Gold is a strong portfolio protection tool. It has low correlation with stocks and performs well during crises. It benefits from rate cuts and rising global tensions. It's easy to buy and highly liquid. Physical gold, ETFs, apps. Part 4. Risks you should be aware of. Gold does not pay dividends or interest. If stocks or technology continue to soar, you may miss higher returns. After such a strong rally, a 10 to 20% correction is possible. Some analysts believe prices are currently overvalued. Part 5. Final conclusion. In my view, gold looks like a strong defensive asset for 2026, especially for investors concerned about global uncertainty. A balanced approach may be to allocate 5 to 10% of your portfolio to gold, purely for diversification, not as an all-in investment. Think of gold as financial insurance, not a shortcut to quick wealth. Gold's rise in 2025 and 2026 is driven by clear forces: safe haven demand, monetary policy shifts, a weaker dollar, aggressive central bank buying. It can be a smart part of a long-term investment strategy, but it is not guaranteed to outperform every other asset. Keep an eye on interest rates, inflation, and global tensions to understand where prices may head next. Ultimately, the right investment decision depends on your financial goals, your risk tolerance, and your current asset allocation. Consulting a financial advisor can help you make the choice that best fits your situation. That's all for today. Stay aware, stay informed, and make financial decisions that align with your personal strategy. Remember, successful investing is not about luck. It's about knowledge, awareness, and timing. Don't follow the noise. Be a smart investor who understands the risks before chasing the returns. If you found this content useful, don't forget to subscribe to the channel and activate the notification bell. Tell us in the comments, do you think gold is a good investment for 2026, or do you prefer other assets? Thank you for watching, and see you in the next video with deeper and more valuable insights.